Let us today start lesson number 8, Journal Proper in Accounts. See, now in accounts till now we have seen subsidiary books. After that we have seen cash book. Okay. Now Journal Proper is also a part of subsidiary book. Fine. We'll be seeing. See, we studied different subsidiary books in the chapter on subsidiary books. The Journal Proper is also a type of subsidiary book. Journal Proper is kept in order to record those transactions which cannot be recorded in purchase book, sales book, purchase return book, sales return book, cash book, petty cash book, bills receivable book or bills payable book. Fine. So see, we have studied in subsidiary book. There are different types of subsidiary book. These are the types of subsidiary book. Fine. Now what do we mean by Journal Proper? The things which are not coming in this book, in all this book, that is first purchase book, sales book, purchase return book, sales return book, cash book, petty cash book, bills receivable or bills payable book. So the things which are not coming in these 7 books will be coming to Journal Proper. Fine. For example, furniture sold to Parthiv for 5,000. See, now we are talking about furniture. Furniture is an asset. Now you have studied in purchase book and sales book that whenever you are purchasing or selling any asset, you never record. You only record the things which are related to goods. So where this will go? So this will go to Journal Proper. This transaction is a credit sale of furniture which is not recorded in any of the subsidiary book. See, now this was sold to Parthiv. It is not cash transaction, so it will not come in cash book also. So the things which are not coming in all these books will be coming to Journal Proper. So here this particular transaction, which is a credit sale of furniture, which is not recorded in any of the subsidiary book, and hence such business transactions are recorded in Journal Proper, which is a part of subsidiary book. So please remember that Journal Proper is something separate than subsidiary book. It is a part of subsidiary book. Fine. Now we'll be going to meaning of Journal Proper. The subsidiary book in which the transactions which are not recorded in any other subsidiary book are recorded in Journal Proper, which is known as Journal Proper. Okay, so what you'll remember for the definition of Journal Proper, that the subsidiary book in which the transactions which are not recorded in any of the other subsidiary book are recorded in the book which is known as Journal Proper. Journal Proper is used for very limited number of transactions. Here the number of transactions will be very less. Fine. The format of Journal Proper is as same as the format prepared to record the journal entries. It has 5 columns, that is date, particulars, LF, debit and credit. So the format of Journal Proper and the format of journal entry is one and the same. In short, you are going to do the journal entries only in this particular chapter. So it might be a revision for you for lesson number 3, that is journalizing. Transactions recorded in Journal Proper. Now see which type of transactions are to be recorded in Journal Proper. First of all, that is opening entries. See, now what do you mean by opening entries? That is when you are starting a business. The entries were then so and so person is starting the business and bringing cash, goods, stock. Okay, see, we will see the example. See, this is your opening entry. Okay, that is while starting the business, Virendra brought cash, furniture, stock of goods, personal debtors, personal creditors. So you were passing out this entry. This you all know. Clear? So this is nothing but this is your opening entries. Then second, transactions not included in other subsidiary book. So now see which type of transactions are there. Here there are 2 parts, A and B. Fine. First, see, transaction of credit purchase or credit sale of an asset. In purchase book you have seen, or in sales book you have seen that the transactions which were only related to goods are recorded. So here when the things are coming to an asset, that will come to purchase book. Okay, that is Mehul purchased a furniture, sold old furniture. So when the transaction is related to furniture or any other asset, machinery or computer, bicycle, so such type of transactions will be recorded in Journal Proper. Fine. Second, transactions for which subsidiary books are not kept. Okay, there are certain transactions for which there is no subsidiary book. See, many times when proportion of a certain type of transaction is very less, a separate subsidiary book is not kept for them. Such transactions are recorded in Journal Proper. All the traders do not keep subsidiary book for recording the bills. See, bills receivable book, bills payable book, we have seen that it is a part of subsidiary book. But for that, many of the businessmen are not keeping a separate book. So the transactions which are related to bill, like this, a bill of 8,000 drawn on data, accepted a bill, so such type of transactions also will be coming into, that is journal proper. Fine. Then third, that is transactions of inter-account transfer. Inter-account transfer, that is from one account to other account the items are transferred. So that we will see. Transactions of inter-account transactions, but before that there is also your C portion. Okay, so in this second type of transaction there are 3 points coming, that is A, B and C. Fine. So here there are 3 points, A, B and C. A we have seen, that is the transaction related to an asset. In B we will be seeing that is related to bills, and in C that is special type of transactions. Okay, so which are that special type of transactions? Goods given in charity, goods given as sample, goods taken for personal use, dishonor of a bill, bad debt, endorsement of bill. Endorsement means giving your bill to someone else, loss of goods due to fire, accident, theft, depreciation. So all these transactions will be coming under special transactions, and thus this will be recorded in journal proper, because this type of transaction you are not recording in any of the that is subsidiary book, purchase book, purchase return, sales book, sales return, cash book. So in all that you are not recording such type of transaction. Fine. So this will come to journal proper. We'll be seeing the third, that is inter-account transfer. Inter-account transfer, see, sometimes due to some reason the amount is transferred from one account to another account, either partially or fully. Such transfer is recorded in journal proper. For example, see, 5,000 payable to Akash is accepted by Dharti to pay. At the end of the year, drawing account is closed and the amount is transferred to capital account. Okay, so closing entries will also come. See, in the first one was opening entry, here closing entries. That is, the drawing amount is transferred to capital account. So this will be also coming and considered it as inter-account transfer. Clear? So this is your third type. Then see, this is your fourth type, that is first, second, year third, fourth year it is, that is closing entry. Okay, so here this is your fourth one. They have not given the numbering proper. Okay, according to this method I am telling, otherwise the numbers are proper. Fourth is closing entry. Closing entry means the balance is transferred to other account. Closing entries means entries given at the end of the accounting year to close various accounts. The end of the accounting year, accounts of income, accounts of expenses, accounts of good, etc. are closed and transferred to trading or P&L account. Fine. For example, see, they have given here purchase account, then sales account. Okay, so this will be transferred. That is, the total purchases will be transferred to trading account. The total amount of sales will be transferred to trading account. Carriage inward will be transferred to trading account. Balance of salary will be transferred to P&L account. So see, the things which are related to purchase and sales, okay, it will be coming to, that is a trading account. Salary is of an employee, so it will be coming to P&L account. Same way, dividend is an income, it will be coming to P&L account. So see here, trading to purchase, sales to trading, trading to carriage, P&L to salary, dividend to profit and loss. Okay, how these entries will be done, that I am showing you. See, purchase account is always debited, so when it is going to trading account, you just credit side it. Okay, normally how you were giving the entries, that is purchase account debited. When it is transferred and the closing entry is there, so it is coming normally on debit side, so here it will be coming to credit side, and debit side there will be trading account. Same with sales, how you were writing to sales account. Fine, so here it is on to, that is credit side, so here it will go to debit side. Carriage inward is an expense. Expenses are always recorded on debit sides, but in journal entry here it will be on credit side. Same with salary is an expense. It will be going to, that is debit side, but here when you are giving the closing entry it will come to credit side, and for salary you will record that is P&L account. Fine. Same way, dividend is your income. For that, incomes are always credited. Remember the rule, that is nominal account rule. Debit all expenses and losses, credit all income and gains. So as dividend is your income, it will be coming to credit side, but here you will give the reverse entry, so it will come to debit side, and here there will be P&L account. Fine. The next is adjustment entries. So see, at the end of every accounting year, entries are to be passed for certain adjustment so that the performance and the true financial position of the business can be known. For example, closing stock is there, unpaid, that is outstanding expense. Okay, unpaid means outstanding expense which is not yet paid, income not received, depreciation, etc. So all these are treated as adjustment entries. Okay, see, at the end of the accounting year there is a closing stock of 20,000, salary outstanding, unpaid means outstanding. Then accrued, again accrued means outstanding income, fine, and depreciation 500 on machinery. Okay, so all these are adjustment entries. Okay, see, stock, closing stock is an asset, so asset will come here debit side, so closing stock account debited to trading account. See, outstanding salary, here you will give actually where it is going. Salary is an expense, it will be going to debit side, so it is unpaid, so to unpaid salary account. Interest is your income. See, incomes are always credited. Okay, only where you have to give the reverse entry, here in closing entries you have to give the reverse entry, whereas in adjustment entries expenses are debited, so it will be debited only. Clear? Incomes are credited, so it will be credit only. And here interest accrued, that is outstanding interest, will be debited. Depreciation is non-cash expense, fine, but it is an expense, so see, expenses are debited. Why I am treating as non-cash? Because depreciation you are not paying to someone. Okay, you are just keeping aside in the business, fine. So depreciation is nothing. See, now if you have any doubts that what do you mean by depreciation, okay, for example, this is a pencil. As and when I will be using, the size of the pencil will get on reducing. Same way, when machineries or any asset is being used in the business, the life of that particular asset is being going on decreasing. Okay, and at a certain period the value of that asset becomes zero, fine. Now after 10 years or 15 years, when the life of that asset becomes zero, again the businessman has to purchase that asset. If he is taking money from his business to purchase that asset, then there will be financial scarcity in the business. So what the businessmen they are doing, the day when any asset is purchased, from that day they will start calculating depreciation on it, and they will keep the amount of that depreciation aside in the business. They are not going to pay that amount to someone, but they are just keeping it aside. Okay, and after 10-15 years the amount which is kept aside will be a lump sum amount. So when the value of that machinery becomes zero and they have to go and purchase a new machinery, new asset, so they can use that amount which is kept aside, that lump sum amount, to purchase the asset. That's why depreciation is not paid to someone else, and thus it is known as non-cash expense, but it is an expense, fine. So in this adjustment entries, what you have to do, the things which are incomes will be credited only, expenses will be always debited only. Okay, so according to rule you are supposed to go, whereas here in closing entries you will go reverse entries according to the rule. For example, carriage inward is an expense, expenses are debited, but here it will go on credit side. Okay, so remember these two things. Then there is rectification of errors. See, now what do you mean by rectification of error? Errors means mistake. If you want to rectify, that is you want to correct your mistake, how to do? So that particular entries are also coming under journal proper. Entries passed to rectify the errors committed while recording economic transactions are called rectification of errors. Okay, so whenever you want to give any entry for correcting your mistakes, so that will be coming to journal proper. Many transactions take place in business during an accounting year and are recorded in the books of account. There are chances of errors being committed while making such records. Okay, so that all transactions are to be recorded. Whenever you do any mistake and you are doing the rectification entry, so that entry will be recorded in journal proper. Clear? See, here they have given an example. 500 paid for salary is debited to office expense. By mistake you have given the entry to office expense. So how the entry was there? Correct entry I am writing for you here. See, this is your correct entry, that is 500 paid for salary. So salary account debited to cash account. But by mistake what you have done, instead of debiting salary account you have debited office expense. So that wrong entry is this, that is office expense account debited to cash account. So now see, this is correct and by mistake you have done this. So this is on debit side. When you rectify this will go to credit side. And whatever is correct, that will be debited. Okay. So in short, what rule you have to remember? Undo what is wrong and do what is correct. Okay, there is a separate chapter for this in accounts part 2 textbook, which we'll be learning soon, but right now this few entries are there, so you will remember like this: undo what is wrong and do what is correct. See, undo means do opposite. So this is wrong, it is on debit side, so undo, so it will go to reverse side. So your 2 office expense, and do what is correct. So salary correct is debit side, so salary account debited. So like this, rectification entries are also coming under journal proper. So here we have studied that which type of entries we will be doing here. So closing entries, transactions which are not included other than subsidiary book, transactions of inter-account transfer, closing entries, adjustment entries and rectification entries. So here our theory portion is completed. Now we will be doing the sums from exercise. Now in practical sums, let us see question number 4, page number 198. Drumil Kamani starts business with the following assets and liabilities on date 1/1/2015. Write opening journal proper. Now see, these things are given to you, and in a note what they have given: record cash and bank balance in cash book. It means cash and bank balance is to be recorded in cash book. So for cash and bank you will not give the entry. So for this too, cash and bank, the entry will not come in journal proper. Fine. And the format will be same, that is serial number, particulars, LF, debit and credit. Instead here you were writing journal entries, so here you will write down journal proper of Drumil Kamani. Fine. See now what they have given. First of all, cash and bank we are not supposed to give because it is recorded in cash book. So furniture, stock of goods, personal debtors and 12% loan from Mayaben rupees 10,000. So these things are to be recorded in the journal proper. So how the entry you are passing in journal entry, same you have to do. Furniture is an asset, stock of goods is an asset, personal debtor is asset. So this will be on debit side in journal entry. And 12% loan from Mayaben, it is loan taken. Fine. So it is a liability, so it will go to credit side. So see what you will do, how you will write down here. First, only one journal entry is there. So number 1, we will write down furniture account debited, that is 15,000. Then stock of goods account debited, that is 20,000. Then personal debtors, so debtors account debited, that is 5,000. 2, that is 12%. So this will be on credit side, loan from Mayaben account, that is 10,000. See, all these things are being brought in the business and the business is started. So here there will be 2 capital account. Fine. 20 plus 15, 35, 35 and 5, 40. Out of 40, this side debit side 40,000 is there, and here they have given 10,000 on credit side. So 40 minus 10, that is the remaining balance is 30,000. So here you will write down 30,000. Fine. So this will be your entry. So the narration, again in journal proper also you have to give the narration, being entry for furniture, debtors, stock, Maya's loan, okay, brought in the business. Fine. Being don't write entry and for, direct write down being furniture, data, stock, Mayaben's loan brought in the business. Fine. So this is your question number 4 solution. Fine. The total if you do for this side, so that will be 40,000 both the sides. So here 40,000 and this side also 40,000. Fine. So this is the solution for question number 4. Now we will see question number 5. See now, question number 5. Sri Gujarat Stores does not maintain separate subsidiary book for transaction of bills receivable, bills payable, purchase return and sales return. Record the following transactions in the journal proper. So now these 5 transactions are given, and for this we have to record the transaction in the journal proper. Okay, so the format will be prepared like this for question number 5. Journal proper for Sri Gujarat Stores, serial number, particulars, LF, debit and credit. See the first transaction. Drew a bill of rupees 8,000 on Ramnik, which he accepted and returned. See, just remember from drew. Okay, when you are drawing a bill, you will draw that is bills receivable. Okay, remember this R. Drew word is there and drew a bill, it means it is a bills receivable, and bills receivable is always debited. Fine. R you will remember, and you will remember the word drew. When this word is there, drew a bill on Ramnik. See, you have draw a bill on Ramnik. It means it is bills receivable for you. Fine. So the entry will be how? Bills receivable is always debited. So here we will write down that is bills receivable account debited. You can write down the full spelling also, that is bills BILLS and then receivable account debited to, and this is also okay. To whom it has been issued, that is Ramnik. So here you will write down to Ramnik account. The amount is that is 8,000. Okay. So here 8,000. This side also 8,000. The narration will be being bills receivable accepted and returned by Ramnik. Fine. Then second, accepted a bill of 3,000 drawn by Vijay. See, it is drawn by Vijay. So for Vijay it is bills receivable and returned to him. This we are accepting. So when you are accepting, it is a bills payable. Fine. So remember, when you are accepting, it will be bills payable. When you are drawing a bill, it will be bills receivable for you. Clear? So this is bills payable, and bills payable is always going on credit side. Okay, bills receivable is always debited, whereas bills payable is always credited. Remember like this. Okay, so now how the entry will be there? Bills payable will go on credit side, so Vijay will come on debit side. So the entry will be like this: Vijay's account debited to bills payable account. The amount is that is 3,000. This side also 3,000. Narration will be being Vijay's bill is accepted and returned. Okay, we are accepting and we are returning. So in short, you have to remember, when you are drawing a bill, it is bills receivable. When you are accepting a bill, it is bills payable. Now we will be moving to third entry. Bills receivable of Ramnik endorsed to Ramesh. See, endorse means to give. Okay, so the bill which you have received, see, drew a bill, the bill which you have drawn on Ramnik, now you are giving that bill to Ramesh. Okay, so how the entry will come? See, this is your first entry, bills receivable to Ramnik. See, when you are drawing a bill, you have written your bills receivable. Now this bill you are giving to whom? So you are endorsing to, that is Ramesh. Okay, so your bills receivable is on debit side. When you are endorsing, it will go to credit side. And to whom you are endorsing? So you are endorsing it to Ramesh. So the entry will be like this, that is Ramesh account debited. See, this bill is being endorsed. So your bills receivable is on debit side. So now it will come to credit side. So to bills receivable account. Fine. So remember like this, when an endorsement type of transaction is coming here, bills receivable is on debit side. So in endorsement, it will go to credit side. And to whom you are endorsing? So you are endorsing it to Ramesh. So Ramesh account debited to bills receivable account. Okay. So here see, amount is not given. So the same amount which is here, 8,000, the same amount will be coming here. Fine. So 8,000 and 8,000. The narration will be being Ramnik bill endorsed to Ramesh. Fine, this will be the transaction. See, the next transaction is goods of 3,000 returned by Paresh to us. See, returned by Paresh. Paresh is returning to us. So what we would have done, we would have sold it to Paresh. Okay, so this is sales return. Clear? Again, I am repeating. Goods of 3,000 returned by Paresh. See, Paresh is returning to us. So what we would have done to Paresh, we might have sold to Paresh. So when by word is there, returned by Paresh, it is what? It is your sales return. Okay, and remember, sales is always credited. So sales return will be always debited. Okay, sales is always coming on credit side. So sales return will be coming on debit side. To whom you are returning? So you are returning to Paresh. So the entry will be like this. That is fourth, sales return account debited. To whom we are returning it? So it is to Paresh account. Fine. The amount is 3,000 here given. So here we will write down 3,000 and 3,000. Fine. The entry you will write down, that is being goods returned by Paresh to us. Fine. Then see the next transaction, that is goods of 1,500 returned to Mahendra. See, you are returning. So what you might have done from Mahendra, you might have purchased. So here it is returned to. See the difference. Returned by, returned to. So here it is purchase return. Now how you will remember, purchase is always debited. So purchase return will be always credited. Now purchase return is going on credit side. So Mahendra will come on debit side. So see the entry now. That is Mahendra's account debited to purchase return account. Fine. The amount they have given, that is 1,500. So here also we will write down 1,500 and 1,500. Clear? Now here you will write down being goods returned to Mahendra. Fine. So your question number 5 is over. When you will do the total of all this, 8,000 plus 3,000 plus 8,000 plus 3,000 plus 1,500, you will get the amount, that is 23,500. Okay. So here we will write down the total, that is 23,500. This side also 23,500. Okay. So this is the solution for question number 5. Hope the things are clear in your mind. Now see question number 6. Record the following transactions in the journal proper of Rakesh. So we will prepare this question number 6, journal proper of Rakesh, serial number, particulars, LF, debit and credit. Fine. The first transaction, see what they have given is, that is gave goods of rupees 5,000 to Anath Ashram. See, you are giving it to Anath Ashram. It means you are donating. Okay. And whenever goods are going outside the business, except sales and purchase, always purchase account is affected and it will go to credit side. Again I am repeating, whenever goods going outside except purchase and sales, okay, then purchase account is credited. See, normally we are debiting purchase, okay, but in case of goods whenever going outside the business except purchase and sales, so in that case purchase account will be credited. Clear? Not debited, but it will be credited. Reverse entry of purchase account you will give. So you have to remember this note. Okay. So see here first. Here this you are donating to Anath Ashram. Okay. It means it is a donation expense. So what you will write down? Goods donation expense. According to nominal account rule, expenses are always debited. Remember, nominal account rule is debit all expenses and losses, credit all income and gains. So this donation expense will be going to debit side. and goods are going out of the business, so purchase account will be credited. Clear? So the entry will be like this. See, first, that is donation expense account debited to purchase account. Fine. And what will be the amount? So the amount is, see here, that is 5,000. So here we will write down that is 5,000. Here you can write down being goods given to Nath Ashram. Okay, this will be your narration. Clear? The entry. Then see the second entry. What is given here? Second entry, distributed goods of 4,000 as free sample. See, again distributing goods. So goods are going outside the business rather than purchase and sell. You are just giving as a free sample. You are advertising your product, thus you are giving it as a free sample. So this is your advertisement expense. So in second entry we will write down that is advertisement expense account debited. Again goods are going outside the business, so to purchase account. This you have already learned in journal entry. Fine. Then the amount is here 4,000, so here you will write down 4,000. Here also you will write down 4,000. Now narration, being goods given as free sample. Fine. So this is your narration. Then moving to third entry, see what they have given. Withdraw goods of rupees 8,000 from the business for personal use. See, personal use, so thus drawing account is affected and drawing is always debited. Goods are going outside the business except purchase and sell, so purchase account will be credited. Fine. So the entry will be like this, that is drawings account debited to purchase account. Fine. Drawings. The amount is, that is how much is withdrawn for personal use, so 8,000. So here you will write down 8,000. This side also you will write down 8,000. Narration will be being goods withdrawn for personal use. Okay. So this will be your narration. Next, see, that is fourth, purchased furniture of 3,000 by giving goods of rupees 2,800. See, again goods you are giving like barter system transaction. Okay, you are taking furniture and you are giving the goods. Again goods are going, that is not in case of purchase and sale, but it is a barter system transaction. So again the same, that is purchase account will be credited. You are purchasing furniture, so furniture is coming in the business, so furniture account debited will be a entry. So see the fourth entry, that is furniture account debited to, that is purchase account. Fine. See, now in case of amount, the furniture cost of is 3,000, but you have given goods of rupees only 2,800. It means for you the amount of furniture is only 2,800. So you will record only 2,800 in the journal proper. So here 2,800, same way here also 2,800, being purchased furniture in exchange of goods. Okay, this is your narration, being purchased furniture in exchange of goods. Fine. Now see the next entry, goods of 7,000 were destroyed by fire. Fine. See, goods are destroyed by fire. Again same concept will come, that is purchase account will be credited, for which insurance company accepted a claim of 5,500. So the insurance company is going to give us 5,500. Fine. So see, insurance company will be giving us, so it will be debited, insurance company account debited. Okay, so they will give us this amount. Okay, we are going to receive this amount from insurance company. Okay, then see 5,500, the losses of 7,000, insurance company is going to give us, that is 5,500. So the difference of that is 1,500. 7,000 minus 5500. So the difference of 1500 will be treated as loss. So here loss is always debited according to nominal account rule, debit all expenses and losses. So loss on goods destroyed by fire account debited. Again, to purchase account. Fine. So see how the entry will be: insurance company account debited, loss on goods destroyed by fire account debited, to purchase account. So now here the cost of the goods were 7,000. Fine. 5,500 is being given by insurance company. So the 1,500 is your amount of loss. So here 7,000, here 1,500, and here 5,500. Like this you will pass the entry, and you will write down here that being goods destroyed by fire and claim of rupees 5,500 is given by insurance company. Fine. This is your narration. Next, moving on to the transaction number 6, that is C. An amount of 2,000 is receivable from Nirali which cannot be received now. Okay, so this amount you were supposed to receive from Nirali which cannot be received now. So it is your bad debt. Okay, so bad debt is always your loss, and that will be always debited. So the entry will be C. Bad debts account debited to who it was received from Nirali. So the account of Nirali will be affected, that is to Nirali's account. Okay, the amount is how much? So that is 2,000. So here you will write down 2,000. Here also you will write down 2,000. Fine. And the narration you will write down, that is being amount receivable from Nirali is not received now. Fine. Now that amount you are not going to receive. So this will be your narration. Then see the 7th entry. Write off depreciation on machinery rupees 800. See, previously also I have explained you what is depreciation. It is non-cash expense. Okay, you are keeping aside in the business, you are not going to pay to someone. As depreciation is your expense. Fine. So debit all expenses and losses. Fine. So depreciation account will be debited. So here the entry will be depreciation account debited. On what this depreciation is calculated? So it is calculated on machinery. So to machinery account. This will be your journal entry. Fine. So 800, the amount is 800. Okay. So here in narration, being depreciation on machinery is calculated. Fine. This is your adjustment entry. Okay, we have seen how many types of entries are coming in this journal proper. So this is your adjustment type of entry. Okay, again this is also your adjustment type of entry. See, salary for the month of March is unpaid, that is 7,800. So see, first of all, salary is what? Salary is your expense. So according to the rule, salary is expense, so it will be debited. So here you write down salary account debited. Now see this unpaid salary. Okay, you are going to pay it in future. This will be your liability. So it will be recorded on credit side. So see, your salary account debited is your expense. It is unpaid. So in future, for future it is your liability. So it will go to credit side to unpaid salary account. Or you can even write down outstanding. O/S stands for outstanding. Okay, in place of unpaid, you can even write down outstanding salary. So the entry is like this: salary account debited to outstanding salary account. The amount is 7,800, 7,800. Fine. So the narration will be being salary for March is unpaid. Fine. This is your narration. Now when you do the total of all this, that is 5,000 plus 4,000 plus 8,000 plus 2,800 plus 7,000, 2,800, you will get the total, that is 37,400. So here we will write down the total, that is 37,400. Okay, so this is your total. Hope the sum is clear in your mind. Okay, all the entries. Now see question number 7. Record the following transaction in Journal Proper of Sri Ekta. Okay, that is for March 2014. So here we will write down Journal Proper for Sri Ekta for March 2014. Fine. So here see, now there is no serial number but there is dates. Okay, so first of all here we will write down the year, that is 2014, then March, and now the date is, that is 1st. Clear? What is the transaction? C. Brought furniture of rupees 7,000, goods of rupees 15,000 and machinery of rupees 20,000 to start the business. So see, this is your opening entry. Whenever you are starting a business, capital account is affected. All these are assets: furniture, goods, machinery. So this will be debited and the capital account will be credited. Okay, so we'll see the entry C here. That is furniture account debited. Furniture is of rupees 7,000. Then goods account debited, that is of rupees 15,000. Then machinery account debited, that is 20,000. Fine. And this all will be affected to capital account. So here you will write down to capital account. Fine. So here the total of this three, that is 7,000, 15,000 plus 20,000, it is coming to 42,000. So here you will write down 42,000 when you add all this three. Okay, and then narration: being brought furniture, goods and machinery to start the business. Fine. This is your narration. Clear? Now see the second entry. Okay, the date is 2nd. Scientific calculator of 2,000 and cellular phone of rupees 25,000 purchased from Kamlesh Trader. See, they have mentioned purchased from. The name of the shop is mentioned. It means it is a credit transaction. Fine. So calculator is coming in stationery. So stationery account debited. Cellular phone, that is mobile phone, so it is an asset, so mobile phone account debited. 2. See, cash is not paid as the name of the shop is written. So you will write down to Kamlesh Traders account. Fine. So here we will write down, that is calculator is coming in stationery. So to stationery, that is stationery account debited. Then cellular phone is your mobile phone. So mobile phone account debited. Both of this is purchased from this shop and the name of the shop is, that is to Kamlesh Traders account. Fine. The amount for calculator is 2,000. So here we will write down 2,000. The cell phone is of 25,000. So here we will write down 25,000. The total of this two is 27,000. So here we will write down, that is 27,000. Fine. Now we will write down the narration, that is being calculator and cellular phone purchased from Kamlesh Traders. Fine. This is your narration. Then see the third. Okay, for the date 3rd, the transaction is, they have given fan of 2,500 purchased for household. See, for household, it means drawing account is affected. Used by giving, it is used for household use by giving goods of rupees 3,000. So you are purchasing fan for your household use. But instead of giving cash, what you are giving? You are giving the goods. So goods are going outside the business. The thing which you have learned here, that is purchase account will be credited. So here it is a barter system type of transaction. Fan is an asset, but it is for household. So you will write down that is drawings account debited. Fine. So here the entry will be like this, that is drawings account debited to, see, goods are given in exchange of fan. Okay, so you are giving your goods. So here there will be to purchase account. Fine. See, the cost of fan is 2500, but from your business the goods are going of rupees 3000. It means the cost for you for this fan is 3000. So you are giving the goods of 3000. So here you will write down that is the cost for you for the fan is also 3000. Clear? So here being purchased fan for household use in exchange of goods. Fine. This is your narration. Clear? Now that is 4th. Okay, for the date 4th, drew a bill of 8000 on Namrata, which it will be she accepted and returned. Fine. So see, again, drew a bill. Here also previously I have taught you drew a bill. See, you are drawing a bill, so then it is bills receivable. Okay, so drew bill of 8000 on Namrata, which she is accepting. See, she is accepting, it means you are drawing, and you are drawing, then it will be bills receivable, and bills receivable is always debited. So bills receivable account debited to Namrata account, this will be your entry. So we will write down bills receivable account debited to Namrata's account. The amount here is 8000. So here also you will write down 8000 and 8000. Okay, being bill due on Namrata, which she accepted and returned, okay, to us. So this will be your narration. Next is 5th number transaction. So you have number 5. Bill of Namrata endorsed to Yesha against her debts of rupees 8050. See, now you are giving this bill to whom? You are giving this bill to Yesha. You are endorsing. Endorsing means you are giving this bill directly to Yesha. But how much you are supposed to pay to Yesha? You are supposed to pay to Yesha 8050, and the bill is of rupees 8000. So 50 will become discount. Fine. This 50 rupees will become discount. So see, first of all, endorsement. Your bills receivable is on debit side, so it will go to credit side, and the party's name, that is Yesha, will come to debit side. So your Yesha is with amount 8050. You are supposed to give Yesha how much? 8050. Yesha will be the receiver, so debit the receiver. So your Yesha account debited for Yesha amount is how much? 8050. And you can also remember that bills receivable here is on debit side. When you are endorsing, it will go to credit side. So see, when your bills receivable is coming on credit side, so obviously Yesha will come on debit side. Okay, but see, this bills receivable is of how much? 8000. So your bills receivable will go for only 8000. See, debit side is 8050, but whereas credit side is only 8000. It means 50 will come here. What is this difference of 50 rupees? It will become the discount. Clear? So here you will write down to discount account. Fine. So this will be your narration. Okay. So now you will write down here being bill of Namrata is endorsed to Yesha. Fine. This will be your narration. Okay. Then see the 6th entry. A bill of 6000 drawn by Bharat, accepted by us and returned to him. See, this bill is drawn by Bharat, not by us. We are accepting it. Okay. So when drawn word is there, it will be bills payable. And bills payable is always coming to credit side. So the entry will be Bharat account debited to bills payable account. Fine. So here you will write down that is Bharat's account debited to bills payable account, or you can also write down only B/P account. Fine. The amount given to you is, that is 6,000. So your debit side 6,000, same way credit side also 6,000. The narration is, being bill drawn by Bharat is accepted by us. Fine. This is your narration. Moving on to the next transaction, see what is given. Transaction number 7. Goods of rupees 8,000 were stolen away from godown, for which the insurance company accepted a claim of 75% of the amount. Fine. So see, first of all, here the goods are stolen. So goods are going outside the business except purchase or sale. So in that case, we have learned that purchase account is always credited. So here first of all, purchase account will be credited with 8,000 rupees. Now insurance company is giving you how much? 75%. So see, what is the 75% of 8,000? So here 8,000 multiplied by 75%, it is coming to 6,000. So see, insurance company is going to give you, so it will be debited. So here the entry number 8, insurance company account debited, that is 6,000. How you got the 6,000? So 75% of 8,000, that is coming to 6,000. Okay. So here you will write down 6,000. Then loss. See, 6,000 you are getting out of 8,000, 6,000 you are receiving. It means 2,000 you are not receiving. That is your 25% of 8,000 will be treated as loss. Okay. So here loss on goods stolen account debited, that is 2,000, and to purchase account, that is total goods stolen away is of rupees 8,000. So here to purchase account. Okay, so this will be your journal entry. Narration you will write down, being goods stolen away and insurance company accepted claim for 75%. Okay, so this is your narration. Then next entry, 9th, cash received from Rajendra for bad debt recovered of rupees 2,000. See, you have received the cash. So cash is coming in the business, cash account debited. What is your income here? So this will be credited, that is to bad debt recovered. Previously it was bad debt, now you are receiving cash for that. So the entry will be like this, that is cash account debited to bad debt recovered account. Fine. How much amount you are receiving? So you are receiving, that is 2,000. So here there will be 2,000 and here also there will be 2,000. Okay, this will be your entry. Narration you can write down, being cash received from, see, Rajendra will not come anywhere. Why? Because party's name is not coming in cash transaction. Okay, for bad debt recovered. Fine. Then see the next transaction. Rupees 300 is payable. See, payable means you are supposed to pay in future. Right now you are not paying. It is not paid. It is payable. It means you will pay in future. Right now you are not going to pay. But as you are going to pay in future, this interest is your expense. So first of all, expenses are debited. So interest account debited. See, you are going to pay in future. It means to unpaid, or you can also write down O/S, that is outstanding interest account. Okay, so this is your unpaid. See, this will be in future you are going to pay, it will be liability, so it will come to credit side. Interest is your expense, so expenses are always debited. So this will be the entry. Fine. So here you will write down, being amount of interest is payable to Manoj. Okay, so this year your transactions are getting over for question number 7. Okay, now when you do the total for all of this, okay, this debit side and credit side, the amount which you get as a total is, that is, so see, you will get this total when you will add all this up. Okay, so that is 1,12,550. So we will write down here 1,12,550. Here also 1,12,550. Fine. So this will be the total. Hope this sum is clear in your mind. Now see question number 8. Past journal entries for following transaction in journal proper. Okay, see what they have given. Rupees 700 received from Renuka is recorded in Bhumika's account. Okay, so see, this is your, that is rectification of errors. Okay, wrong entry has been passed. You have received the amount of Renuka, but you have recorded the amount in the name of Bhumika. So what is the correct entry? See, 7,000 received from Renuka. So the correct entry for this transaction is, that is cash account debited to Renuka's account. Fine. So see, now what you have done is recorded in Bhumika. So here in place of writing Renuka's account, you have written Bhumika account. Okay, in wrong entry. So what you will do here, you have written in place of Renuka, you have written Bhumika. So if I want to cancel that Bhumika, here Bhumika I have written on credit side, so it will go to debit side. Fine. So here Bhumika's account will be debited. See, undo what is wrong and do what is correct. So what is correct? Correct is this. If you want to do, see, this is correct. So here you can write down, that is to Renuka's account, because this Renuka is correct. So here in place of Renuka, who was there? Bhumika was there. So now Bhumika, when you will cancel it, it will go to debit side. So here the entry will be Bhumika's account debited. Okay, so this is your rectification entry. Okay, here it was Renuka, but in place of Renuka you have written Bhumika. So Bhumika will go to opposite side and Renuka was here, so you will write down here only. Undo what is wrong, do what is correct. Okay, so the amount is 700. Here also 700. Being, the narration will be amount received from Renuka is recorded in Bhumika's account. Fine. So this is your narration. Now see the second entry. 1,000 received from Updesh for bad debt written off in past, which is credited to Updesh account. See, here clearly they have mentioned that the amount is credited to Updesh. So this is wrong. When you are receiving the amount from anyone for bad debt return, so the bad debt return account is credited. Okay, we have done this entry here. See, in this particular sum, amount received, cash received from Rajendra. What we have done, that is cash account debited to bad debt recovered. So here the bad debt recovered account is credited, but here by mistake to whom they have credited. So this is wrong. See, so this will go to debit side. Here they have written that which is credited to Updesh. So debit Updesh account. So here directly we will write down, that is Updesh account debited to bad debt recovered account. See, undo what is wrong. This was wrong, so it went to opposite side, and do what is correct. So the amount is 1,000 and 1,000. The narration will be being amount received from Updesh for bad debt return is credited to Updesh account. Fine, this will be your narration. Okay. Now see the third entry. 800 paid to Sharma is debited to Verma account. See, again they have told that paid to Sharma, by mistake it is debited to Verma. So the mistake is done on debit side and the name is Verma. So you are debited to Verma. So Verma will go to credit side and Sharma will come on debit side. Like this you can do directly. Fine. So see, Here the third entry. So Sharma account debited. See, if you are paying to Sharma, it will come on debit side only. And this was mistake, debited to Verma. So now Verma will go to credit side. So here you will write down to Verma's account. The amount is 800 and 800. Fine. The narration will be being amount paid to Sharma is debited to Verma's account. Fine. This will be your narration. Clear? Then see the next one, fourth. 1200 paid for insurance premium. Okay, is debited to drawings account. It means this is wrong. So drawings account will go to credit side and it is paid for insurance. So the entry will be insurance premium account debited to drawings account. Fine. Again I am repeating. Debited to drawing account. This is your mistake. So it will go to reverse side. So drawing will come on credit side and on debit side insurance premium will come. So here the entry will be like this. See. Insurance premium account debited to drawings account. Fine. The amount is, that is 1200. Here also 1200. Narration will be being paid for insurance premium is debited to drawings account. Fine. This will be your narration. Fine. Now see the fifth one. That is old furniture of rupees 6,000 of business sold for 5,800. See, furniture was of 6,000 but it is sold for 5,800. So here they have nothing mentioned. It means the entry for loss is remaining. You will remember like this. Okay, so the loss is of how much? 6,000 furniture is the cost and you are selling it of 5,800. So the loss for the furniture is 200. So you will give the entry only for the loss of furniture in this type of transaction. Clear? So here the entry will be loss on sale of furniture account debited to furniture account. Fine. This will be your entry. Loss on furniture account. It means the entry for loss is not given. Fine. So loss on furniture account debited to furniture account. Here in place of two sales you will write down the name of the furniture asset, that is furniture. The loss was 200. So this side also 200. So the thing was of rupees 6,000. It is sold for rupees 5,800. So the loss is coming to, that is 200. Fine. So here you will give the narration being furniture sold at loss. Okay, this will be your narration. Fine. Now do the total. Okay, when you do the total of all this, the amount comes to, that is 3,900. Okay, so 3,900 debit side, 3,900 credit side. Here the sum gets over. That is question number 8. Then question number 9. Pass journal entries for closing of the following account. Okay. Now see, in closing entries I have told you that you will give the reverse. Okay, you will do the reverse of the rule. Okay, reverse of the rule you have to do. So see, first of all, interest expense account. Interest is expense, it is debited. Okay, so what reverse you will do? So it is going to debit side, but here it will go to credit side. Fine. So it will go to credit side. And to which account it will be transferred? See, income and expenses will go to P&L account. Okay, and the goods related will go to trading account. Again I am writing here, income expenses is transferred to P&L account. Purchase sales is transferred to trading account. Like this you will remember. Okay, so first of all, interest is expense. It will be transferred to P&L. And when you are closing, you will do the reverse. So see, interest is expense. Expense is debited. So this will be, here it will be credited. Okay, credited. And which account will be debited? So P&L account will be debited. So the how entry will come. So see your first entry, that will be P&L account debited to interest account. See here, interest is first it is debited, the reverse of debit is credit, so interest will go to credit side, and income and expenses goes to P&L account. So here P&L account debited, the amount is 1000, so 1000 and 1000. The narration will be being interest account closed and transferred to P&L account. Okay, this will be your narration. Fine. Then see the second, sales return. Okay, now see, sales is debited, sales is credited and sales return is debited. Fine, I am writing here. See, sales we all know that it is credited, so sales return is debited. So see, according to rule, sales return will be debited. Now reverse of this rule, so here it is debit, so here it will be credited. Okay, so sales return account you will credit, and sales or purchase it is going to trading account. So see, sales return is to be credited, so trading account will be debited. So the entry will be like this, that is trading account debited to sales return account. Fine. Then amount is 3000, here also 3000. Fine. Narration being sales return account is closed and transferred to, here it is transferred to trading account. Fine, this will be your narration. Okay, then see the third, purchase return. See again, purchase is always debited, purchase return is always credited. Reverse of this rule, so it will go to debit side. Fine, and purchase is related to trading account. So how the entry will be there? So purchase return account debited to trading account. So here we will write down the entry, purchase return account debited to trading account. The amount is 2000 and 2000. So here the narration being purchase return account is closed and transferred to trading account. Fine, this will be the entry. Clear? Now we will see the fourth one, interest received. See, it is an income, so according to rule, income is always credited. The reverse of this will be debited. Okay, it is income, interest received is your income. Okay, so it will be credited, the reverse of this it will be debited, and income and expenses goes to P&L account. So for this, which account is it is transferred to P&L account? So the entry will be interest account debited to P&L account. Fine, so here you will write down interest account debited to P&L account. You can also write down interest received if you want. Okay, so interest received account debited to P&L account. The amount is 800. Being interest account is closed and transferred to P&L account. Fine, this will be your narration. Then see fifth one, advertisement expense. See, expense is always debited, reverse of this will be credited, expenses goes to P&L account, it is transferred to P&L account. So what you will do, P&L account debited to advertisement expense account. So see, the entry will be P&L account debited to advertisement expense account. Fine, the amount is 1500 and 1500. The narration will be being advertisement expense account closed and transferred to P&L account. Fine, this will be the narration. Okay, then see the sixth one. It is salary account. See, again salary is expense, so according to expense it will be debit, the reverse of this will be credit, and as it is expense, so expense is transferred to P&L account. Okay, so the narration the entry will be here like this, that is P&L account debited to salary account. The amount is how much? 4,000. So here 4,000, the narration will be being salary account closed and transferred to P&L account. Fine, this will be the narration. Now we will see the seventh one. Dividend received. See, it is income, so income is always credited, the reverse of this will be debited, and income goes where? So P&L account. So the entry will be dividend received account debited. So see, dividend received account debited. See, if you want to write down receiver, write, otherwise if you are not writing, then directly dividend account debited to P&L account. The amount is how much? 700. So here you will write down 700. Narration will be being dividend account closed and transferred to P&L account. Okay, this will be your narration. Fine. Then eighth. See, what is they have given? Purchase. Purchase is always debited, so the reverse of this will be credited. Okay, so how the entry will be? Now purchase goes to trading account. Okay, purchase, sales or purchase return or sales return, it all goes to trading account only. So now here, that is the entry will be trading account debited to, see, purchase account is to be credited, so trading account debited to purchase account. Okay, this will be your entry. So see, we will write down like this, trading account debited to purchase account. Fine, the amount is how much? 5,000. So here we will write down, that is 5,000. Now narration, being purchase account closed and transferred to, see, this is transferred to trading account. You have to remember to which account it is transferred. So remember like this, purchase return, sales return, it will be transferred to trading account, whereas income or expenses or losses will be transferred to P&L account. Fine. Now see the next one, ninth. Sales. See, sales is always credited, the reverse of this will be debited. Fine. So sales account debited and sales is coming transferred to trading account. So sales account debited to trading account. So see, sales account debited to trading account. Okay, the amount is how much? 10,000. So here we will write down, that is 10,000 and 10,000. Fine. The narration will be being sales account closed and transferred to trading account. Okay, fine. This is your narration. At the end, what you will do? You will do the total. Okay. So see, when you will do the total of all this, it is coming to 28,000. Okay, when you will do the total of all this, debit side and credit side, it will be coming same, and it will be 28,000 here and 28,000 this side. Okay, so this is your whole chapter for Journal Proper. Hope all the sums are clear in your mind. Still, if you have any doubts, then you are always welcome. You can ask your queries. Fine.